Well, joining me now is Steve Hanke, professor of applied economics at Johns Hopkins University, as we digest these retail sales numbers together. Steve, the headline number a little bit hotter than expected. Retail sales rising 0.4% in October versus the 0.3% expected. And it seems like pricier autos were at play here. What is this signal?
Well, these data are, if you're data dependent, of course, you watch all these data coming in and they zig and zag around. But my view is that the economy is going to slow down and probably will experience a recession next year. Now, also related to this is inflation. Inflation, picked up just a little bit. The last reading we had earlier this week went from 2.4% per year to 2.6%. But all of this is coming down. The economy will slow and inflation will slow. I think inflation next year actually will be lower than the Fed target of 2% per year. Now, why is that? That is because the money supply has actually contracted since July of 2022. The stock of money in the economy now is lower than it was back in the summer of 2022. Now, that kind of contraction, Christian, has only happened 4 times historically in the US. And all 4 of those cases, we had recessions. Mm-hmm. And we had actually one of the 4 cases, we had the Great Depression. We had a huge contraction in the money supply, 1929 to 1933, and we know what happened then. So what happens, the fuel for the economy, mm-hmm. to make it simple, is the money supply, mm-hmm. and what's going on in the money supply. And if you get significant changes in it, you get significant changes in nominal GDP, mm-hmm. and nominal GDP includes a real component plus an inflation component. So that's more or less the story.
It's right. All about certainly supply and demand economics, as Steve, at play here. It's what drives the economy, we know. The big news, in addition to what we heard from the Fed chair yesterday, is, of course, the election results. And in fact, a red sweep in Washington. Americans voting for change after what was effectively a blue sweep in 2020. How does that impact the economy going forward?
Well, number one, we really don't know what President-elect Trump is going to do. I think if one big thing, if he institutes a lot of the protectionist measures that he's talking about, it's going to be a big negative for the economy, not a positive.
And how does that show up, Steve? How does that show up insofar that it would impact consumers and Americans' pocketbooks?
Well, it shows up for the American pocketbook. It's very clear. If you put tariffs on imports, it's like putting a sales tax on those imports. So if you put a sales tax on something, what happens? People don't demand as much of it.
Mm-hmm. Now, I want to ask you about what we gauged from the inflation reads earlier this week. We had seen consumer prices actually pick up a little bit in October after what had been 2 years of a steady cooling in the pace of price gains or inflation. And wholesale prices also showing, in fact, that those ticked up due to costlier rents and used autos in the month of October. Do these numbers surprise you?
No, they don't surprise me. As I indicated before, these numbers zig and zag around, but the trend is down. And the trend in inflation is down, and it's down because the money supply is growing at a very slow rate, and it's actually contracted. The slow rate of money growth, measured by M2, is 2.6% per year, and Hanke's golden growth rate for the money supply M2, that's consistent with hitting the Fed's inflation target at 2%, is 6%. So the actual growth at 2.6% in the money supply is way lower than the golden growth rate of 6%, which is consistent with hitting a 2% target. So that means that inflation next year we'll get some readings that are below the target of 2%.
Steve Hanke, great to get your take. Of course, we're trying to parse through all the economic data as the election has been a key focus for us here on this show and what it means for Wall Street the past 10 days or so. But we much appreciate you joining the show. Steve is the professor of applied economics at Johns Hopkins University. As those retail sales numbers do come in a little bit hotter than expected, again driven by autos last month.